Every year in the UK, thousands of bank accounts are suddenly frozen, leaving people unable to withdraw money, pay bills, or even access their own savings. What's even more shocking is that many of these people haven't been charged with any crime at all. Sometimes it only takes one unusual transaction, a large transfer, or activity that looks suspicious to a bank's monitoring system. Within minutes, your account could be flagged, restricted, and placed under investigation without any warning. So the real question is, could this happen to you without you even realizing it? In this video, we'll uncover 10 powerful UK laws that could freeze your money and the simple things you must know to protect yourself. Number 10. Banking terms and conditions enforcement. Most people believe their bank account can only be frozen if they break the law. But here's something many don't realize. Banks also have the power to restrict or freeze your money if you violate their terms and conditions. When you open a bank account, you agree to a long list of rules, most of which people never read. These rules are designed to help banks comply with financial crime regulations, fraud prevention policies, and risk management laws. If the bank's monitoring systems detect activity that breaks these rules, they can temporarily block transactions or freeze the entire account while they investigate. For example, using a personal account for business transactions, receiving unusually large payments without explanation, or frequently sending money to high-risk accounts can trigger internal security checks. Even if your intentions are completely innocent, the bank may still pause your account until you provide documents explaining the activity. To protect yourself, always understand how your account is supposed to be used. If you run a business, open a proper business account. Keep records of your income and payments, and notify your bank if you expect any unusual transfers. A few simple precautions can prevent unnecessary problems and ensure your money remains safe, accessible, and under your control. Before you go, tell us in the comments which of these laws surprised you the most. Your thoughts help us create better videos for you. And if you appreciate the effort behind these research-based videos, please subscribe to the channel. It takes just one click, but it helps us keep bringing you valuable content. Number 9. Joint account liability rules. Many people open joint bank accounts with a spouse, family member, or business partner because it makes managing money easier. But what most people don't realize is that a joint account also means shared responsibility for every transaction that happens inside that account. Under UK financial monitoring regulations, banks treat joint accounts as collective financial responsibility. This means if one person connected to the account performs suspicious activity, such as unusual transfers, fraud-related transactions, or receiving money from high-risk sources, the bank may take action against the entire account, not just the individual responsible. In some cases, banks may temporarily freeze the account while they investigate, which means both account holders lose access to the money, even if one person had nothing to do with the activity. Imagine needing to pay bills, rent, or daily expenses, but suddenly being unable to access your funds because of something someone else did. To avoid this situation, it's important to be very careful about who you share financial access with. Only open joint accounts with people you fully trust and understand how they manage money. Regularly review account statements and keep communication open with your co-account holder. A joint account can be convenient, but remember, it also means shared financial risk. And now, we're curious. Would you ever open a joint account after hearing this? Drop your answer in the comments. We read every single one. And if you value the effort and research behind these videos, please subscribe to the channel. It's just one click, but it helps us continue bringing you powerful financial insights. Number 8. Tax compliance and HMRC investigation powers. Another reason your money could suddenly become inaccessible is tax compliance investigations. In the UK, HMRC, His Majesty's Revenue and Customs, has significant authority to monitor financial activity and investigate accounts that show signs of undeclared income or suspicious financial patterns. Banks and financial institutions often share certain financial data with tax authorities to help detect possible tax evasion or hidden income. If HMRC notices large deposits, frequent transfers, or income that does not match what you reported on your tax return, it may trigger a deeper investigation. In some cases, authorities can request information from your bank or even take action that leads to temporary restrictions on your account while they verify where the money came from. This doesn't always mean someone has done something illegal. It simply means the authorities want clear proof of the source of funds. To avoid this situation, it's important to maintain accurate financial records. Always report your income correctly, whether it comes from employment, freelancing, investments, or side businesses. Keeping documents such as invoices, contracts, and tax filings can make it much easier to explain your finances if questions ever arise. Transparency is key. When your financial activity matches your reported income, the chances of facing unnecessary investigations become much lower. Let us know in the comments. Did you already know HMRC has these kinds of powers, or is this new to you? Your feedback helps us understand what topics matter most to you. And if you enjoy well-researched content like this, please subscribe to our channel. It's just one simple click, but it supports the hard work behind every video we create. Number 7. Sanctions compliance rules. Another powerful regulation that could unexpectedly freeze your money is related to international sanctions laws. Governments place financial sanctions on certain countries, organizations, and individuals to prevent illegal activities such as terrorism financing, corruption, or international crime. Banks in the UK are legally required to follow strict sanctions compliance checks. This means every transfer, payment, or financial connection is automatically screened through advanced monitoring systems. If a transaction is linked, directly or indirectly, to a sanctioned person, company, or country, the bank may immediately block the payment or freeze the account while the situation is investigated. Sometimes, the connection can be completely accidental. For example, sending money to someone whose name appears similar to a sanctioned individual, transferring funds to certain high-risk regions, or dealing with businesses that are unknowingly linked to restricted entities can trigger security alerts. To stay safe, always double-check who you are sending money to, especially when making international transfers. Make sure the recipient is legitimate and avoid financial dealings with unknown organizations or suspicious contacts. Sanctions laws are designed to protect global financial systems, but they also mean banks must act quickly when they detect potential risks. It's being cautious with international transactions can help ensure your funds remain secure and accessible. We're curious. Have you ever had a bank question one of your transfers? Share your experience in the comments. Your story might help other viewers avoid the same situation. And if you appreciate the research and effort behind these videos, please subscribe to the channel. It takes just one click, but it truly supports the work we put into every video. Number 6. Crypto asset regulations. Cryptocurrency has become incredibly popular over the past few years, but many people don't realize that crypto transactions are now closely monitored under UK financial regulations. Authorities introduced stricter rules to prevent money laundering, fraud, and illegal financial activities connected to digital assets. Today, as many cryptocurrency exchanges operating in the UK must follow anti-money laundering (AML) laws and report suspicious activity to regulators. This means that large or unusual crypto transactions, such as moving big amounts of money between wallets, sending funds to unknown exchanges, or converting crypto into cash quickly, can trigger security alerts. If a bank detects unusual activity related to cryptocurrency transfers, it may temporarily freeze your account while verifying the source of the funds. In some cases, banks may even block transactions involving certain exchanges that they consider high risk. To avoid these problems, it's important to use regulated and well-known crypto platforms. Always keep records of your transactions, including purchase history, wallet transfers, and exchange statements. If your bank ever asks about a transaction, having clear documentation can make the process much smoother. Cryptocurrency can be a powerful financial tool, but understanding the rules surrounding it is essential to keep your money secure and accessible. Now, we'd love to hear from you. Do you think banks should monitor cryptocurrency transactions this closely? Share your opinion in the comments below. And if you enjoy the effort and research that goes into these videos, please subscribe to our channel. It's just one quick click, but it helps us continue creating valuable content for you. Number 5. Fraud prevention and payment monitoring systems. Modern banks no longer rely only on human checks. Today, most financial institutions use advanced fraud detection systems powered by artificial intelligence to monitor transactions in real time. These systems are designed to spot unusual behavior instantly and stop potential fraud before it spreads. Every time money moves through your account, the bank's monitoring system quietly analyzes the transaction. It looks for patterns such as rapid transfers, multiple payments in a short time, unusual locations, or transactions that don't match your normal spending habits. If something appears suspicious, the system may automatically flag the activity. When that happens, the bank might temporarily block a payment, freeze a transaction, or restrict access to your account while they review the situation. In many cases, this protection is meant to safeguard customers from scams. However, even legitimate transactions can sometimes trigger these alerts if they appear unusual. To reduce the chances of this happening, try to keep your financial activity consistent and transparent. If you plan to make a large transfer or unusual payment, it can be helpful to notify your bank beforehand. Also, always double-check the recipients of your payments to avoid sending money to accounts linked with fraud investigations. These monitoring systems are designed to protect the financial system. Yeah, but understanding how they work can help you avoid unnecessary disruptions. Quick question for you. Has your bank ever blocked or questioned one of your payments? Tell us your experience in the comments. Your story might help someone else watching this video. And if you appreciate the research and effort we put into these videos, please subscribe to the channel. It's just one click, but it means a lot to us and supports future content. Number 4. Unexplained Wealth Orders, UWO. One of the most powerful financial tools used by UK authorities today is called an Unexplained Wealth Order, often shortened to UWO. This law allows investigators to question how someone obtained their money or assets if their wealth appears significantly higher than their known income. In simple terms, if authorities notice that a person owns expensive properties, luxury items, or holds large amounts of money that don't match their reported earnings, they can legally demand an explanation. The individual must then provide clear evidence showing where the money came from. If the explanation is unclear or the person cannot provide proper documentation, authorities may take further action. In some situations, assets or bank accounts may be temporarily frozen while investigators review the case. The goal of this law is to target serious financial crimes such as money laundering and corruption, but it also highlights how important financial transparency has become. To avoid any problems, it's essential to maintain clear records of your financial history. Keep documents such as salary statements, business income records, investment reports, and tax filings. These records help prove the legitimate source of your money if questions ever arise. Being organised with your finances ensures that your wealth always has a clear and traceable explanation. But now we want to hear from you. Do you think governments should have the power to question someone's wealth like this? Share your opinion in the comments below. And if you value the research and effort behind these videos, please subscribe to our channel. It's just one simple click, but it helps us keep creating informative content like this. Number 3. Anti-money laundering, AML, regulations. One of the biggest reasons banks may freeze accounts today comes from strict anti-money laundering, AML, regulations. These laws require banks to actively monitor financial activity and stop money that may be connected to criminal activity, fraud, or illegal businesses. Under these regulations, banks must verify where money comes from and where it is going. If a transaction looks unusual, such as large cash deposits, frequent international transfers, or money moving through several accounts very quickly, the bank may flag the activity for investigation. Sometimes the situation can happen without any bad intention. For example, receiving large payments from unknown sources, moving money for someone else, or acting as a middleman for transactions can raise serious concerns under AML rules. If the bank suspects something unusual, they may temporarily freeze the account while reviewing the activity. To protect yourself, it's important to always know the source of the money you receive. Avoid handling funds for people you don't fully trust, and be careful when someone asks you to transfer money on their behalf. Keeping clear financial records and staying transparent with your bank can significantly reduce the risk of triggering AML alerts. These regulations are designed to protect the financial system, but understanding them helps you avoid unnecessary problems. Let's make this interesting. Have you ever been asked by a bank to explain a transaction? Share your story in the comments, because your experience might help thousands of other viewers. And if you appreciate the time and research we put into these videos, please subscribe to the channel. It's just one click, but it helps us continue creating content like this. Number 2. Account freezing orders, AFOs. One of the most powerful financial tools used by UK authorities is something called an account freezing order, often referred to as an AFO. This law allows law enforcement agencies to temporarily freeze money in a bank account if they suspect that the funds may be connected to criminal activity or unlawful conduct. What makes this law surprising to many people is that an account can be frozen without the owner being charged with a crime. If authorities believe the money might be linked to activities like fraud, money laundering, or illegal financial operations, they can apply to a court for an account freezing order. Once the order is approved, the bank must immediately restrict access to the funds while investigators examine the situation. During this time, the account holder may not be able to withdraw or transfer money until the investigation is completed. In many cases, the purpose of this law is to prevent criminals from quickly moving money out of reach. However, it also means that people must be careful about how money moves through their accounts. To protect yourself, always keep clear records of your income, business transactions, and financial activity. If authorities ever question your funds, having proper documentation can help prove that your money was obtained legitimately and legally. We'd love to know your thoughts. Do you think banks and authorities should have this level of power over personal accounts? Share your opinion in the comments below. And if you appreciate the time and effort behind these videos, please subscribe to the channel. It's just one click, but it helps us continue creating valuable content for you. Number 1. Suspicious Activity Reports, SARs. One of the most common reasons bank accounts get frozen in the UK comes from something called a Suspicious Activity Report, often known as a SAR. This is a legal requirement that forces banks and financial institutions to report transactions that appear unusual or potentially linked to financial crime. Every bank in the UK is required to monitor customer activity closely. If a transaction looks suspicious, such as sudden large transfers, unusual cash deposits, unexpected international payments, or activity that doesn't match your normal financial behaviour, the bank may file a suspicious activity report with authorities. Once a SAR is submitted, the bank may temporarily freeze or restrict the account while investigators review the situation. During this time, customers often cannot access their money until the bank receives clearance to release the funds. As the important thing to understand is that this process can happen even if the account holder has done nothing illegal. The system is designed to prevent fraud and financial crime, so banks must act quickly when something looks out of place. To reduce the chances of triggering a SAR, always keep your financial activity consistent and well documented. If you plan to make an unusually large payment or transfer, informing your bank in advance can sometimes help prevent unnecessary alerts. Understanding how these systems work can help ensure your money remains safe, secure, and accessible. Now it's your turn. Which of the 10 laws in this video shocked you the most? Tell us in the comments. We genuinely read them because your feedback shapes our future videos. And if you appreciate the research and effort behind this content, please subscribe to the channel. It's just one quick click, but it helps us keep creating videos like this for you. When you hear about laws that can freeze bank accounts, it might sound alarming at first, but the reality is that most of these regulations were created to protect the financial system from fraud, money laundering, scams, and illegal financial activity. The challenge is that sometimes ordinary people can unintentionally trigger these systems simply because they don't understand how modern banking rules work. As we've discussed in this video, there are several situations that can raise red flags, from suspicious activity reports and anti-money laundering checks to crypto monitoring, sanctions laws, and unexplained wealth investigations. Banks today rely on highly advanced monitoring systems that constantly analyze financial behavior. If something appears unusual, even for a short moment, your account may be restricted or temporarily frozen until everything is verified. But the good news is that there are simple ways to reduce your risk. Keeping clear financial records, reporting your income accurately, and avoiding transactions that involve unknown or suspicious parties can make a big difference. If you ever plan to make a large transfer, receive a big payment, or move money internationally, informing your bank in advance can sometimes help prevent unnecessary alerts. The key takeaway is simple. Financial transparency and awareness are your best protection. When your transactions make sense and your documentation is clear, it becomes much easier to resolve any questions that may arise. Banking systems are becoming more sophisticated every year, and understanding how these rules work can help you stay one step ahead and keep your money secure. And remember, staying informed about financial regulations isn't just helpful. In today's world, it's becoming absolutely essential for protecting your financial freedom.